I guess I'll start with, is it Ms. Bao? Am I pronouncing it properly?
That's right.
I think you mentioned you've been in business for about 8 or 9 years.
9 years.
Okay. Have you actually applied for a 7A loan at any
I actually started in business with an SBA loan.
You did?
9 years ago.
And have you subsequently tried to get capital there and that has not been?
No, in all honesty, the reason that I've not looked at that is because it was quite an experience to go through that I've hoped, of course, over time to use other avenues. It took an awful long time to go through it. The paperwork was unbelievable. It was a difficult experience, in all honesty. But that was 9 years ago.
And subsequently, there was easier credit for some period of time, maybe, that you could have gotten. But now, as it's tightened up, is it something you make?
I tried several times over the past few years to get business loans to increase my business and open new stores. I've had to rely on my home equity to do that because I have what they call soft collateral.
Right. Okay.
Yeah.
And can I ask what the structure of your company is? Are you incorporated or?
I'm incorporated. I have 5 employees, including myself.
Okay. C Corp?
Yes.
S? Okay.
S Corp, I'm sorry.
S? Okay.
S.
One of the questions I have, and you may not know, and then I would open this one up to the panel, is does that seem to be affecting the small businesses and their consideration as how they're structured? I've had some people suggest that they think after they became a C Corp, because of the requirements that they have to provide as that entity, they had more documentation to provide when they were pursuing loans. Is that relevant or not relevant from your experience? I'll throw it out in general.
As far as our bank is concerned, and we deal with sole proprietorships, partnerships, corporations, there is a set amount of paperwork that really does not differ very much from one form of organization, business organization, to the other. You obviously have very specific forms for these different forms of business, but the paperwork is basically the same for all of them based on our experience.
And I'll throw one other question on to layer this in your responses too. Do you see that those who are C Corps are more likely to get approved, maybe just because they have more of that information available? Not that you're requiring more, but that because they have to do it already. I'm just curious.
The fact that you have a C Corp versus a sole proprietorship in and of itself does not make a difference. What very well may happen is a C Corp may have audited financial statements, they may have monthly financial statements, budgets, but quite honestly, if the sole proprietorship has the exact same,
the documentation,
then there is no difference as far as we're concerned.
Mr. Sargis, did you want to comment?
Yeah, I would just concur with what Mr. Schroeder said. It really, in our case too, doesn't make there's no difference in terms of the application process from our standpoint.
Did anyone else want to weigh in on that? Yes.
Well, I've always been S Corp with all 4 of my corporations, and there are substantial tax breaks like a Section 179 recovery for capital investment, so I'm not sure why any small business would like to be a C Corp. They miss some very good tax breaks.
Yeah. Right.
Well, I guess I have to get a new accountant. I'm a C Corp, which is apparently unusual.
I can hook you up.
But, you know, the carryback would be substantial for me. You know, again, when I formed my corporation, I assumed I'd had 20 profitable years ahead of me, and I fell short by 3, so.
Okay. All right.
But the paperwork has not been any more cumbersome to, you know, in applications or loans.
All right, thank you. My other question for Ms. Bao is one of the things, I don't know if I actually heard you say it today, but I think I had read that you mentioned was the possibility of accessing retirement funds,
right,
as a stopgap measure. Can you share a little bit more about that challenge? We had done actually in this subcommittee, we had done some hearings on pension parity equity issues, and that's one that had not come up, is in hardship being able to access those pension dollars. We did talk about some of the differences of employees of a larger corporation who have access to their tax-deferred 401k dollars. In some cases, small businesses who may have a SEP don't have the same access to their own tax-deferred dollars, and so we were looking at that. I'm very curious to hear more about that.
Well, I do have an IRA. The problem with that, of course, is when you take the money out, the tax consequences are terrible. I think for probably a small business owner, too, we don't get to invest that much money into it as perhaps the larger companies, because obviously we're using our money for operating expenses. The problem there is that once you take it out and you lose almost 50% of it into taxes, then are you ever going to be able to even put it back? So you're looking at possibly extending, for me, my retirement probably 20 years. I'm 54. I don't want to work until I'm 74.
Because what you had to do is you couldn't withdraw from it for hardship purposes
Right.
and then pay it back into
Exactly.
pension in the way sometimes others can from 401ks.
Exactly.
But instead had to withdraw and take
Exactly.
the penalty.
I was one that opened my IRA many, many years ago, and so for me to take the money out, it's a real problem.
Okay. Thank you. I'd like to ask David Schroeder, if I might, confirming the recent downturn we've seen in the economy. The Fed Reserve survey recently showed weaker demand and tighter lending standards for all borrowers and all types of loans. In most situations, credit tightens in response to some perceived risk associated with lending. Has that been the case with the current pullback that we've seen?
Well, I'm happy to say that community banks are alive and well, and community banks are lending money. Now, having said that, the recent mortgage meltdown, the recent credit crunch, and liquidity crisis have all had an impact on our economy, and that really has been the reason why there has been a negative impact on our bank and a negative impact on our customers.
Okay. And for Ms. Hollingsworth, from 2002 to 2007, the average size of the 7A loan has decreased by over 65%. Given the current economic situation and business costs increasing, does that make sense for you that the loans would be getting smaller?
No, Congresswoman, it does not. I speak from time to time on funding small businesses for sorted groups, and I think one of the strongest things that gives rise to these high statistics of small business failure in the first couple of years is they're usually significantly underfunded. So further underfunding is sort of signing the death warrant ahead of time.
You mentioned in your testimony, you talked about how many of the firms you work with are undercapitalized and also underinsured, which then doesn't leave them
Right.
with the facility to rebuild when you come in. You also mentioned less companies are using disaster recovery planning procedures in advance, certainly not best practices when it comes to risk management, and that's also due to lack of funding. Typically, what size companies have you worked with historically, and has that changed over the course of your business?
Our firm is primarily disaster recovery as opposed to planning, meaning we go in and clean up computers, manufacture equipment, et cetera. We've worked from anywhere from Verizon to NASA to state and federal governments down to mom-and-pop Instaprints or 7-Elevens and everything in between.
So you are in after the fact. You're not there.
We are the after the fact. But what I'm seeing very consistently, we're headquartered in Chicago with offices around the country, but a lot of the small manufacturing companies are in the Chicago area, and when they have a significant disaster, they're already struggling in the Rust Belt with the manufacturing, and they get faced with the choice of literally taking the insurance proceeds and running, and many of them are electing in larger numbers than ever to shut their doors. We just had a disaster in Chicago 3 weeks ago. Prince Circuit Board manufacturing company, he's folding up, going out of business.
So in some ways, in the same way that we're seeing in the residential community of people who are finding themselves so upside down that they're preferring to walk away than restructure their loans because the property values have dropped, you're saying many small businesses, or to a greater degree than what you had seen in the past, are finding themselves literally so underwater that they're not even going to try to recover.
Yes, Congressman, and literally, as I was mentioning, Gulf Coast and communities in Florida and all along that area, notably, things they had for collateral, such as homes and so forth, they're simply gone. They have an empty lot. There's no more home equity. The mortgage may still be running. Their insurance did not cover for floods, so they did not have insurance coverage. And, you know, from the corner bakery to the Ace Hardware store to Joe's Bait Shop, there's just no way for them to recover.
Right.